Hello and welcome everyone to today's Institutional Trading Live webinar. My name is Richard and we hope you're all keeping very, very well. And thank you very much for joining us. So in this 60-minute live webinar, we'll be taking an in-depth look at some high probability trading opportunities on daily time frame price charts where we're looking to capture some major market moves. So before we begin, can you please just take a quick moment to make sure you do read our disclaimer currently up on screen, and please do note the financial risks involved in trading the financial markets. So hopefully you've had an opportunity to do that. So just a few pieces of housekeeping before we begin. This is a live interactive webinar, so please do feel free to ask questions throughout. At any particular point, you can access and locate your chat box on the right of your screen. So just post any questions there, and we'd be more than happy to answer any questions that you have. David, good to have you on board once more. Good morning to you as well. So we aim for these webinars to be as interactive and as engaging as possible, because it is about your development and knowledge and understanding as a trader is what is of major concern to us. So this is a live webinar and it is currently being recorded. So it will be placed in your members area for those of you that are members of Forex.Academy. And once this webinar is concluded, it'll be posted there for you. And we will, as we always do with our live broadcasts, have a Q&A session at the end of this live webinar. Okay, so moving along then, what is the aim of this particular webinar, and the reason why we deliver it consistently on a daily basis is, and it's very, very simple, it's to improve your trading skills. So what we want to do is to enable you to increase your knowledge and understanding of the financial markets. But more concisely, we want to equip you with the ability to remain consistent in your trading approach. So a lot of traders or retail traders can really struggle from chopping and changing their approach when they trade these markets, when in actual fact, a strategy and a methodology which is based in consistency is profoundly important for those that are profitable trading these markets. And of course, discipline is something which is bandied about quite a lot. And discipline for us is looking to make sure that we mitigate against potentially significant losses. And we're talking about a significant portion of your account balance, for example. So if you can remain disciplined in your approach, you absolutely have a better chance for medium and longer term success. And finally, their patience is so important. There is times when you need to trade a financial market, and then there's other times when, unfortunately, you need to apply significant patience. Now, when we look through the charts now this evening, you'll be able to see some of those charts where hopefully you will agree with our opinion in terms of the best course of action right now is for us to identify the market conditions, to understand the dynamics of the price action, and on occasion, patience is actually the most important thing to take on board. So that's what we look to do, is to equip you with not just those buzzwords, but to actually facilitate the implementation of those skills. And just to let you know, our approach has a very strong emphasis on risk management. So what will we cover for the next 60 minutes? We'll start by reviewing market moving news events, see if there's any potential news events that can impact us for the days ahead. So we'll have a quick review of that. Then we'll amend current trades. Now, we're not currently in any trades at this moment in time, but we will proceed to review the remaining charts, see what opportunities may exist, and then if we identify an opportunity where we want to execute a particular trade idea, then we will plan our trades and execute that before we finish the end of this live webinar. So what you effectively have is a comprehensive approach that we're looking to apply on a daily basis in a very consistent, disciplined, and patient manner, and looking to capture, as we've already stated, major market moves in the markets that we look at. Okay, so let's begin with reviewing potential market moving news. So for this, we will work with Forex Factory, which is just happens to be the website that we're just going to be currently working with. And I think it's important to just highlight yesterday at 2:40 p.m. and this is GMT. We had the president of the ECB, Mario Draghi, and he was speaking and he was testifying on monetary policy and the inflation outlook before the European Parliament Economic and Monetary Affairs Committee. So a significant deal. Now, traders globally are very, very interested, of course, in the decisions of global central bankers in terms of their outlook towards interest rates, whether they have a hawkish approach to interest rates, meaning there's the expectation for interest rates to start increasing, or if it's more of a dovish approach, then that central bank will be looking to decrease interest rates. So again, that has profound impacts for the price discovery in a whole range of varying markets. So as a result of that testimony, it was quite clear that the ECB, certainly for the shorter term, is looking to maintain its accommodative approach to the potential for increasing interest rates. There is no short-term view to adopt a hawkish approach for now, and he's quite eager to stress, you know, they have to monitor things as things develop. So things could change, obviously, at any point. So they obviously keep that door open. But in terms of kind of forward guidance, letting the markets know exactly what is in store for the ECB, then things seem to be fairly steady as she goes, I think, is the approach that, or the phrase that we'd probably use. So that was interesting yesterday. We'll have a look to see how that impacted the euro very, very shortly when we go through the charts. So that was a significant move, and what we'll actually see in the charts is any particular dollar strength that we were able to see off the back of Draghi's speech, because it did impact across the board the US dollar more than perhaps other currencies. So we'll have a look at the impact that had, because what we saw initially was some strength coming into the US dollar for a good few hours, and then subsequently the prices started to reverse. So we're currently at a similar price where we were prior to that speech. So that's interesting in its own right. Okay, so moving down then, let's just do a review of today's market moving news. And we have a very, very important speech today by the new Fed Chair Powell, who's taking over from Janet Yellen. So she has now finished her term in office, and we have Fed Chair Powell now taking over. So to give you a bit of an overview in terms of his stance or approach, and again, it's with regards to interest rates and monetary policy. Also, the Fed is looking to steady the ship, to just constantly take on board all of the indicators that are necessary for them to make decisions, and they're going to just keep sort of moving forward, should I say, with Yellen's more medium and longer term plan. So there is obviously a hawkish view this time for the Fed. They are looking to increase interest rates on a number of occasions this year, and the market is constantly searching for sort of information and guidance in terms of how many, in reality, interest rate increases will we see over the course of 2018 and beyond. So that has the potential to be very volatile period of time. So we will take that on board with our decision making in this particular webinar. In addition to that, we also have core durable goods orders, but to be fair, the testimony by Powell is going to be much more significant than any number regarding the core durable goods orders, and it's a monthly figure as well. And also today, if you happen to be trading the US dollar, then there is a significant piece of news out at 3 p.m. UK time, and this is just consumer confidence, and of course that's very important for an economy. The more confident consumers are, the more they buy, the more they spend, the more it impacts on profitability, employment, and the more money people have, and if you get an increase of wages, the more money people have, the more they spend, and that keeps the wheels ticking over. So actually consumer confidence is quite important, and again has the potential to we have the potential to see a little bit of volatility today. Now, the number that's expected is 126.2. If we get a number that's higher than that, then we're likely to see a bit of strengthening into the US dollar. And of course, if we see a lower printed number, meaning there's marginally less confidence than what was expected, then it might impact the US dollar adversely. Okay, so that's just a review of the day's market moving news. Just projecting forward, there is a couple of interesting news announcements, and I suppose today as well, just at the actual delivery time of this particular webinar, we do understand that Liam Fox, the Trade Secretary from the US, is also going to be talking about Brexit negotiations and the impact that that can have. We'll have a look at the Carney speech, which is the Bank of England chair, and we'll have a look at that very, very shortly. But whatever the Trade Secretary has to say about the negotiations with the UK's largest trading partner, being the EU, could be quite significant, and then it has the potential to impact the British pound accordingly, and potentially the euro. So we'll have a look at those charts very shortly, and to just flick through the remaining news announcements over the coming days. The reason why we want to be aware of this is to assist us in our decision making when it comes to executing trades, or at least placing pending orders in these markets. We want to know if there's a major news announcement that has the potential to unsettle some of the trades that we're looking to get into. So we are technical traders, so we do trade the markets technically. We're very accurate with our entry and exit prices, so that's important to take on board. However, we can't ignore the fundamental impacts and the important fundamental news releases that has the potential to rock markets accordingly as well. So we do want to take these on board. So on Wednesday in the early hours of the morning, we will have a business confidence figure coming out affecting the New Zealand dollar. So if you are trading the New Zealand dollar in any way, that just has the potential to be volatile for that particular market. Tomorrow at lunchtime at 1:30 p.m. UK time, again, we have a GDP figure. Now the GDP figures are printed in 3 stages. This one happens to be the prelim, which I believe is the first one. The beauty about Forex Factories, you can click on the information tab, and it can give you a little bit of an update to just refresh your memory. So there's 3 versions of the GDP released a month apart. So we have the advance, the preliminary, and the final. So this is the second phase of the GDP figure impacting the US dollar, and we're expecting actually a 2.5% over the quarter. So again, if the GDP figure comes in line with that figure, then you would expect that price to be largely built in to the US dollar. If we get a slightly positive figure, then it's likely to be supportive for the US dollar, and if we get a negative figure, it's likely to detract from the US dollar accordingly. And just an important figure to just sort of reference on Wednesday is the crude oil inventories. So that obviously has the potential to impact any crude oil trades that we might be in. Moving on to Thursday, just ever so briefly, the Aussie dollar. We have a private capital expenditure. Just has the potential to experience a little bit of volatility around that time. The reason why we can identify is this particular website identifies the most important news releases. Yes, there is many others, but it's the important ones that you should initially sort of look to get some information on and see how that can impact your trade ideas. 9:30 on Thursday, the 1st of March. So we're obviously coming to the end of the month now over the next 2 trading days. So we have to take that on board as well with our decision making. If we have really explosive markets, either to the upside or to the downside, what you're often likely to see at the end of the month is a little bit of a pullback. Now, obviously, there's variances in that, but we would expect to see in a bullish market a little bit of a pullback, leading into the end of the month. A lot of profits are being booked in for those traders that are trading those markets, and you're likely to see a little bit of a slight pullback. So we're entering a difficult phase at the end of the month. So we'll bear that in mind with our decision making as we go. 9:30 on Thursday, we have a manufacturing PMI. So we're expecting a 55.1 figure. There's also charts here as well, so you can flick through those and you can see how this particular news release has been printed over a considerable period of time. So again, a positive figure has the potential to benefit the pound, and a negative figure has the potential to impact the pound, so adversely. So we also have Fed Chair Powell testifying again on Thursday. So again, that has the potential to be significant. So he's testifying this time to the Senate Banking Committee. So again, the market will be looking for information on the impact behind rate decisions, and also finally with regards to monetary policy as well. So that just about concludes the final sort of piece of news. Basically on Friday is with regards to we have the Prime Minister of the UK, Theresa May, looking to speak and probably give the next installment in terms of an update in terms of how these Brexit negotiations have been unwinding. So that has the potential to be incredibly volatile on Friday, and also we have Carney speaking as well. So an interesting day for sure on Friday, and we will speak about these in a little bit more detail each and every week. So at the beginning of the week, we do just start with a little bit of an overview of the week ahead, just so that we can have an understanding in terms of what we can experience for the trading days ahead of us. Okay, so that's a review of potential market moving news. What I'm going to do now is let's go straight into the chart. So if we were currently in trades, then we would be looking to go straight into those trades. We'd be looking to amend, potentially we'd be looking to mitigate risk if the price action requires it, or potentially looking to book in profit, whatever the case may be. However, we're currently we're not in any trades at the moment, so we're going to look for potential opportunities. As I've alluded, the nature of the time in the month, coming to the end of the month, we can exercise a little bit of caution in terms of direction. What we're seeing in the dollar index is a clear double bottom formation. So we're actually looking, if some strength starts to enter the dollar index, then we're looking for a break above the 90.22 level. So that has potential significance to the upside. The reason for that is, let me take that off. And the reason for that is this would represent a double bottom. So we've had prices bouncing down to the upside. We've made a structural high. Prices have failed to close below the 90.22 level. We've failed to make a new low, and we are getting prices pushing higher. So what we would like to see is a confirmed break above the 90.22 level, and we shall see, we have the potential to see a positive trade to the upside, trading a double bottom. So it's really we just have to wait. We're currently in between these two levels of support and resistance. So price is not conducive to making any trade decisions currently. So it's really either a break to the downside below the 88.40 level, or a break to the upside at the 90.22 level. So we're very much looking for directional bias. Everyone, of course, knows that the market has been in an incredible downtrend for the best part of 14 months now. So a break beneath the low would would obviously be working with this recent price action over the last year or so. However, a reversal of this level would be counter trend, so we have to take that on board in terms of our ability to calculate risk and trade size accordingly. So we'll be taking that into account with all of our trade decisions moving forward. So in reality, it's a similar position across the board, certainly impacting a lot of the dollar pairs. So again, we're in this position. This is the euro dollar daily time frame. So we're seeing price action move sideways. Again, this is an inverted look of the dollar index. Prices are moving higher. So we're getting this price action bounce, make a low, and really struggle to make that high again. So this is an inverted picture of the dollar index. So really the levels to watch to the downside are the 22.42. However, it could be quite possible we could get a little push back up to these recent highs. So we're waiting for this market to determine to us what decisions should be made. So this is the euro dollar daily time frame. So it's a similar situation across the board with many of these dollar related pairs. So we're in between two major levels of support and resistance. This is the pound dollar. What also is going on with this is we can actually see a bit of a bull flag in this market. So what we're seeing is price action squeeze higher. We clearly make a high, and then we make a structural low. But in the meantime, prices have been bouncing in between this level. So what that happens that we see a narrowing of price action. So it's going to be interesting to see which direction this market breaks out. Do we get a confirmed break back up to the 142.50 level, or do we get a breakout of this what is ever a decreasing range, and do we get that extended move lower? So if we go with the prevailing winds, we would be looking for the higher probability trade to the upside. However, this type of price action has the potential to reverse, and we can capture that and take that into consideration when it comes to calculating trade size. So that's the price action that we're seeing here. So we're just going to watch this price action very, very closely. So again, in terms of consistency, we kind of know what we're looking to do. But with regards to patience, this is one of these trades as well. We just need to apply a little bit of patience to the British pound. And don't forget, we do have Liam Fox. We also have Theresa May, and we also have Carney from the Bank of England. So there's a number of fundamental developments over the course of this week. So we're not surprised if price action, especially coming to the end of this month, just procrastinates for a little bit. Okay, so moving on then to the dollar yen. So as you can see, we've fairly recently broken below the 107.91 level. So we're in a period of consolidation for quite some time, bouncing lower and higher, as you can see up on screen. So it's been operating in a very predictable manner. There's been numerous opportunities to sell at these levels. So they produced some very, very profitable trades. And you could argue there was opportunities as well to buy at these levels, pushing prices to the upside. So you're seeing this sort of price action, which is very much range bound over a significant range from 114.38 to the upside to 107. So there's a good 700 pip movement between the top end and the bottom end. So what that meant for us as traders is it gave us some really interesting opportunities for some significant risk reward. Now, of course, you have to be patient with those trades. That's why we trade daily timeframes. So we have time to think clearly, to apply our approach in a very calm and considered manner. And as you can see, we've had a recent break beneath this lower range level of 107.91 level. So we had the market break down as usual. And if you can see currently up on the screen, the market made a low. It put in a candlestick which can indicate a little bit of reversal. So we're getting that bit of price action pushing to the upside, and of course it bounces off previous levels of support. So a level, this is why we really enjoy working with support resistance, is because levels of support on the way down become resistance on the way up. So that's effectively what we're seeing. So we're getting this little price move lower, and as you can see, this is kind of a hammer candlestick. So we're getting a bit of downward movement. The hammer clears out the bottom of the market, and we're getting this little sort of 4-day reversal to the upside. But we are running into resistance, and we're now seeing a bit of a sell-off off that resistance. So it is working very, very technically for the time being. So we just got to be patient, bide our time in this market before we execute a trade. Okay, so that's the dollar yen. Just regarding the dollar CAD, so you can see the significant sort of move to the downside in the dollar CAD. So it's quite messy, as you can see. What we would like to do is look for opportunities to buy above the 128. We're currently at the 127, and this is actually the 128.90 level. So we're the best part of a couple of hundred pips away from potentially instigating perhaps a more longer term breakout trade to the upside. Where I suppose it could be argued that we do have another level of support resistance sitting in this market. So, and what we look for is previous lows, and just see the significance of that level, because all of these levels can vary in significance, from major swing highs and swing lows to just multiple areas of support resistance within those areas. So so we do have a little bit of resistance around here, around the 127.66 level. So we've had a bit of a pullback. So really we're in transition phase. What we can see in this market is a bullish tendency. We've experienced a structural failure, making a low. So the market bounces back, creates a structural high. We've attempted to make a new low and has failed, so that now becomes a higher low in this market, which is the beginning of a potential uptrend. And we've seen this level break, although you can't look at that and suggest that that has moved with any major degree of significance. So there's a bit of hesitation around this price action. So we actually want to just apply a little bit of patience in this dollar CAD market as well. So moving on, similar picture just regarding the Aussie dollar. On this occasion, we're seeing a market high and a recent swing low, and this low price becomes potentially a structural failure to the downside. So we're actually needing to be a little bit patient with this market. Currently, we're getting a bit of bullish price action around the 78.03, the 7800 level. So we're currently above that level. So again, this is one of these markets. And another bit of price action for you to potentially consider would be this time a bearish flag. So we're seeing this kind of price action, and that just has the propensity to apply a little bit of price pressure from the upside. So if we get a break below these levels, we potentially have a nice trade to the downside, but this trade could break to the upside as well. So we want to be prepared for all eventualities. So we'll just monitor this as we go. Okay, so that is the Aussie dollar. So moving on then to the New Zealand dollar. So again, similar kind of position, creating a double top. Now there's a number of these dollar related markets are looking to stack up quite nicely, because when we get sideways moving or range bound markets, we can normally get explosive moves either to the upside or to the downside as a result. So as you can see, with a lot of these markets, we're kind of in the middle of major levels. So again, just to reiterate, patience is definitely called for, especially coming up towards the end of the calendar month as well. Same situation regarding the euro pound. So we're just in this consolidated move. So on a very straightforward basis, a confirmed break beneath the 87.47 could constitute a very, very interesting sell trade. We're getting these continued lower highs with a bit of price pressure, just pushing markets lower. So our higher probability trade will be to the downside. However, if we do get a confirmed break above that level as well, there could be an opportunity to take this market and push it up to the low 90s. So that is the euro pound. The reason, as we all know, for this price action is largely to do with the Brexit negotiations. So the back and forth nature of the negotiations, creates a very unclear picture for the euro pound. And as you can see, currently it's behaving appropriately within this range. So this is a descending triangle. So we're likely to see a bit of narrowing of price action, to continue. So again, just a little bit of patience in that market as well. And to just finish off our foreign exchange pairs, we do have the potential to buy off this level of support. You can see it's been a level of support now for the best part of 6 months. So with that in mind, let's zoom in. We are getting this consistent flush to the downside, largely as a result of a bit of the panic which has entered the global indices. So we got this extended move to this low of 131.45, and as you can see, we've got a bit of a bearish spinning top in this market. Plus we have a bit of price action, as you can see currently up on screen, which is it's just putting a bit of a question mark in the mind of a trader, this particular price action. So we're kind of rejecting the lows. Today's candlestick is bullish, as you can see, but it's not filling us with any great enthusiasm to start looking to buy this trade. So in terms of a potential buy, that could exist around this kind of general area to take this market back to the upside. However, a break of these recent lows could constitute a sell trade as well. So we need to keep our options open. We just need to see a little bit more from this market before we can make any trading decisions. And so just moving on to the global indices. So we've got 6 more markets to go through. So as you can see on this market, this is the S&P 500. So we had what was one of the largest moves in January in this particular market, and that was followed very quickly by one of the largest sell-offs, so for quite a number of decades. So so what that means for us is a little bit of it's a market which is showing extreme volatility. We do like volatility. It's just this type of volatility just makes us a little bit more uncomfortable. So as you can see, if I can show you the longer term trend as well, you can see we've had this price action consistently breaking higher. You had the unbelievable move to the upside last month, followed by an 8 or 9 trading day 10% devaluation in this market. So listening to the news, it could be this could be explained as the wheels coming off this incredibly bullish market, but in actual fact, nothing significant has changed to any great extent. Yes, we did have an excessive pullback to the downside. Now it's just largely viewed as a correction until price action tells us otherwise. So actually, we then started to trade relatively consistently within this trade over the last 3 weeks. And as you can see, yesterday's price action for the first time just broke above that top edge, and we've run into a little bit of resistance at this level here. But you would expect with this price action, we're seeing a structural failure to the upside plus a double bottom down at these lows. You would expect this market to potentially be pushing highs in the near future. But again, for now, we need to see a little bit more from this market. And we're looking for a price to break above that 26.86 level. And to see if there's an opportunity to buy this market. So we're looking to go with the trend. So that would be the nature of this trade. Plus we get a structural failure to the upside. Plus we need to see some additional bullish price action to even consider trading this to the upside. And we'd also need to get the correct risk reward for this type of trade as well. So, we need to take decisions over the decisions that we make that we need to that needs to fall into place for us to get into these trades, and then that lends itself to the whole to the aspect of remaining consistent with your approach as well. Okay, so this is the Dow Jones, the US 30. Again, similar position. we'd expect continuation, especially after candlesticks of the last 3 days. It's quite bullish. Now, what we might do short term is get a little bit of a pullback to the 25,240 level. And if we get an opportunity to buy at these levels, there could be a nice clean move back up to recent highs. So unless price action changes considerably or something fundamental changes in some of these global indices, that would very much be the plan of action. Again, we've had the last 3 trading days in the NASDAQ have been very, very bullish, as you can see. However, we've kind of created a double top. So it's going to be very interesting to see. And above this high here is all-time highs. So this is a market that took a major devaluation less than 3-4 weeks ago, and we're now currently back up at recent highs. So that's the market conditions in which we're trading. So again, a little bit of patience just required at this point. The FTSE, which is the UK 100, so we are getting slightly positive price action off the back of this major devaluation, and we've created a structural failure to the upside. However, today's price action doesn't fill us with any significant confidence. So we again, and apologies for just reiterating our position, but for now, we're going to remain somewhat patient with some of these trades because the price action requires us to do so. So last 2 charts then, we're looking at the gold daily time frame. So again, this seems to be working in tandem with the US dollar. So we're currently getting similar price action. The US dollar has created a double bottom and is just procrastinating between 2 levels of support resistance. And as you can see, the same exists here with the gold market. So what we're looking to do is, unless something significant changes, is to look to buy this market above the 1357 and to sell it below the 1315 level. So we're currently in the middle of that price range. So we again need to exercise a little bit of patience in that market as well. And finally, the crude oil market, which is the US oil. Again, we're currently between 2 major levels of support resistance. So we are bullish over the short term. We do think that this market has the potential to squeeze up to these levels to begin with, and maybe beyond. So we will monitor that closely. And don't forget, the crude oil inventories figure will be released on Wednesday as well. Something to consider that has the potential to impact this price action. So again, with the theme for the day is very much with regards to patience. So as a result, we've not been able to identify a particular trade where we can calculate the trade size and look to get into that trade and work out the number of pips between our entry and our exit, which can assist with our ability to accurately manage risk accordingly. So as a result, that brings us to our Q&A. So that's an overview of the day's trading, with the overriding impression to just remain a little bit patient for the coming days and see what develops across a large number of different markets. So patience without a doubt, and don't forget, being patient is a skill that you need to acquire. So it's a very important part of trading. Knowing when to trade and when not to trade has the potential to impact your ability to be profitable to quite a considerable extent. So do please bear that in mind. Okay, I'm just looking through the Q&A page, and there doesn't seem to be any significant questions coming in. So on that note, thank you very much for joining us here at the Forex.Academy. And we shall look forward to hopefully see you join us again tomorrow evening. So from everyone here, do take care and bye for now.